This is the Friday, November 17th, 2017 version of the Market Plus segment. Joining us now is Mark Gold. Mark, welcome back.
Nice to be back, Mike.
You know, we had such a great conversation going during the program. I skipped over cotton, and I feel terrible to all of our viewers in the Southeast and the Central South. So let's talk about it. What's the cotton market doing? We're still counting on larger and larger yields. I was talking to a banker down in Lubbock, Texas. He said harvest is moving along at almost record pace. Yeah. Are we going to get the yields USDA is calling for?
I think, you know, these genetics today, whether it's grains or cotton, are so good that it's hard not to think that the yields aren't out there. And no, we're not at 80-cent cotton out here, but we're at prices that we can live with and do some marketing and just not get complacent about it. And certainly, you know, if they are going to sell to the gin and get rid of the cotton, look to buy back some call options, try to keep the upside open. We've got a long road ahead of us, and I just don't like the idea of farmers selling at not great prices, being out of the game, and not being able to participate and share in a rally if it comes. And I think it's worth spending some money to get that done.
You bet. And nothing's worse than watching the market rally right after you've
sold it. Exactly right.
Yeah.
And what happens once the farmer sells it? The market has a tendency to rally.
It does. And now that's one of those things, Mark, when we talk marketing, and you do it all the time, I get the chance to do it a little bit here and there. We talk marketing, and a lot of times there's a mindset I think that producers have adopted, particularly over the past 5 years, as we get into this period where prices aren't so great, and they're not so exciting. Do folks have to change the way they think?
One of the things I'd like to talk about in the last couple of months is that too many farmers, in my opinion, view marketing as a game that they want to win.
You bet.
And this isn't the type of game that you can win. This is a type of game that you can use as a pathway to better marketing. So the guys out there want to win this game. They want to hit the home run. They want the high prices. They want to sell at the high, buy at the low. And that just doesn't happen out here. And, you know, look at any major league ball player. If he hits 300, he's a heck of a ball player, and he's wrong or missed the ball 7 out of 10 times. So we've got to get the American farmer thinking it's not a game, it's a pathway. And if you want to do a better job, you've got to participate in it, you've got to be active in it, but don't try for the highs and lows. Try to take chunks out of this market and put some dough away and look at it in a different light. I mean, when I was at the University of Illinois, we played the marketing game. I think most ag schools play a marketing game, and some brokerage companies play marketing games. It's not a game. It's your life, and you've got to quit looking at it as a game. It's a business, and act like it's a business with the marketing, which means you've got to be focused and looking for opportunities.
You bet. There is no leaderboard at the end of the year with who does the best. It's just you sitting with your banker,
That's right,
seeing if you get to do another round next year.
That's exactly right.
Well, now, speaking of that, Mark, we've got Matt from Amherst, Wisconsin, who's saying he's playing the game, and he says, what sales targets should a person have for new and old crop corn and beans?
Well, I think on old crop, because we've got such a big carry out in the corn, you know, if we can rally from 335-ish back up to 380, I would start looking at making some sales literally every dime between 380, 390, and don't do it on the full pennies.
Right.
Do it at 379, do it at 389, do it at 399. Don't wait for that print and scale up into this thing, because I believe it's going to be pretty hard to maintain a sustained rally out here as long as we've got these huge carryouts and the farmer is still holding as much grain as he's holding. Now, we're going to get in shortly, probably in the next month or two, about what a farmer is going to plant next year. If there's any inkling that these corn acres are going up with these big carryouts, you've got to take advantage of it, which answers the question for new crop. We're at 385-ish, you know, again, 399, 409, 419 are some good target areas to start laying into this. And if we see that the funds want to get long, look to buy back some call options for whatever you've sold. I think farmers forget the fact that they can sell whatever they want, whenever they want it, and buy a call option and still participate in this game and spend 10 or 15 cents and stay in the game.
Have the cash in their pocket and have a position on the board.
And not have to worry about the downside because they've got the grain sold.
Right. And not have to worry about a margin call if you're buying.
If you're buying the options. Absolutely right. That's a great.
Next question, similar in scope. Phil up in Ontario, Canada at Agrodome on Twitter says, yield monitors and my own corn yields don't lie. He says 175.4 bushels per acre. Shocked, but how likely is it that the USDA ups corn yield again come January?
It would be hard to think that they can. But when you see this kind of a jump, I have never seen this big of a jump. And I think what the farmer has to understand is they're saying, how could the yields be this good when the weekly crop ratings kept declining in July and into August? And the reason is we saw the ratings increase in October, dramatically increase. Why was that? Because these genetics have trained these plants, if you will, to wait for the rain. And in July, when we didn't see the rain, in the early August, these crops didn't look good and were in trouble. But they waited for the rain, and then they got the rain, and that made the difference, and that's why we saw the ratings improve. That's why the yields jumped. And can it inch a little bit higher? Maybe it can.
Okay. If it does inch a little, I mean, if let's say we put another 0.2 of a bushel on 175.5, is that going to spook the market, or have we already kind of decided that, it's just big?
We know it's big. We know the carryouts are big. And now it's a matter of the fun money game. What are they going to do? And if they come in for that 200,000 plus contracts that they're short, this market's going to move higher, period. Yeah. But there will be commercials and farmers willing to sell that rally to get rid of some of these big stockpiles that we've heard about all over the country.
Now, so with that being the case, given the fund's position, is there any position, Mark, where you would advocate folks to buy the call before they've made the physical sale?
No.
We no need to get the Texas loan.
That's what we call a Texas hedge. And we, as a risk manager, I'm not playing a game of craps with that. So when you've sold the grain, that's when you look at buying the call.
Perfect.
We didn't answer the question about targets for soybeans.
Oh, yes, sorry.
So for old crop beans, I'd be looking at, if you've got old crop beans, try to capture some of the carry that's in the market, buy back a call. I wouldn't want to be storing, I don't know why the guys would be storing beans in here. If they're going to be storing corn, they got to go out and capture the carry. There's plenty of carry in the market. Go out and actually capture the carry by actually selling that deferred contract. Don't say, oh, I'm going to put it in the bin and store it because there's carry, and then don't do anything about it, because that carry will bleed out over time.
Right.
So on beans, I'd just be selling those beans. On new crop beans, let's look for a price 1030, 1040, somewhere in that range. Again, maybe at 1070, 1080. Let's see what the acres do.
South America, we're
South
still
America is,
sitting on weather down there.
We're just starting in South America. Yeah. A lot of things can happen, and if that happens, it can happen quickly. So if you are going to make sales 1030, 1040, look to buy back a call option. Stay in the game.
All right. Next question. You talked about this briefly during the program. Louise in Amy, Kansas wants to know, or she notes that a lot of wheat was planted late in the central and the southern high plains. Yeah. And how relevant is this to the market? How closely does the market watch American wheat plantings given the great bulk of supply that we have globally?
Well, it's going to be less important this year because of the huge world carryouts. Our carryouts have been coming down a little bit. That's helpful. We've got the crop pretty much in the ground. The big question is how many acres have gotten planted? Yeah. What did farmers decide to do about planting wheat? Are there alternatives? Did they do something else? Are they just not going to plant wheat? Could they get the financing to plant the wheat? So we need to see what those final wheat numbers are. But again, there have been so many years, in the 43 years I've been in this business, we've had some of the best bull markets start with the biggest carryouts. So when we're down on acres and continually losing acres, and if we have any glitches here, we're really not going to know that really until March. But the crop ratings aren't great. Yeah, we went from 51 to 54, back to 53, I think. But I don't think the plantings are going to make that big of a difference. What's going to make a difference is when we find out exactly how many acres were planted.
Makes sense. Now, our final question for you, Mark, is from Jeremy in Lanark, Illinois, Jay Flickma on Twitter. Jeremy notes that corn is range-bound, beans are similar, and we're waiting for South American weather. He's looking for a way to add some more money to his operation. He says, he's asking, is this the time to be selling options? Can we add value to sales that way?
In my opinion, if you want to shoot yourself in the foot, go ahead and sell options. and I would have a lineup of 10 brokers out here saying, oh, Mark's wrong. So we've made money selling options, and what a great thing this is. Right now, the gammas on the options are so small that you're looking to risk dollars to make pennies out here. That isn't risk reward I'm interested in. And in general, they say, well, options expire worthless 85% of the time, so we're going to capture that premium, put that money in our pocket. Okay, that's fine. What are you going to do with the 15% of the time they don't expire worthless? And that's what kills guys. It kills the pros. I've seen traders in Chicago just to our positions, our long positions. When we bought 750 puts for 50 cents and everybody said, we'll sell you those puts for 50 cents and thought they were going to make a fortune, 3 traders went belly up and our clients picked up tens of millions of dollars in option premium. So if you want to risk 1 out of 8 shot that you're going to lose the farm, be my guest. But as a risk manager, that's not something I want to be a part of.
And it comes back to the mindset. If you're a speculator, if you're in this just to gamble your money and see how it works,
go for it.
Do it.
Go for it.
If you're in this to keep a farm around for the next generation, for the generation after that, that's a high-risk choice.
And look how quickly it can go bad. The guys that were selling bean calls on Friday, how did they cover those positions 20 cents higher in the same day? And if it opens higher on Monday, they got some real issues out there. So they've made money for 6 months and give it back in one day. Nothing I'm interested in.
Before we let you go, Mark, you said the gamma is so tight. For folks that aren't options traders, what's the gamma?
Well, the gamma is one of many Greeks that make up the composite of the valuation of the option. There's the deltas, which people know about, and the thetas and the gammas. And these are all ways to measure the option value and what that premium should be. And it's an indication that the volatility is so low that there's not a lot of risk, but the reward is minimal. So that's not something I want to do.
Perfect. Well, Mark Gold, thank you so much for taking the time to talk to us. Always appreciate your thoughts.
Nice to be here again. Thanks.
And folks, remember, we are always looking for students to submit their big picture commodity questions right here for the Market to Market Classroom project. So join in. Send us your questions in video form. You can direct message us on Twitter or send an email to markettomarket@iptv.org for details. So join us again next week when we'll look at 2 initiatives that are aimed at keeping food waste out of the landfill, and Don Rose will sit across from me at the Market to Market table. Until then, thanks for watching or listening. I'm Mike Pearson. Have a great week.